Hello everybody. So the markets continue to be awful. I'm working on a 7 stocks video about covering all sorts of stuff from Nvidia to other stocks I've covered on the channel. This is coming. But before, there is urgent news about MSTR. MSTR is having its big conference in the middle of an ongoing market meltdown, right? It's been going on like this with the whole Jane Street mess. This has been the case for weeks, this meltdown, but there's enormous announcement. MSTR is working very hard under the hood, and this is a big deal. So I'm calling this video the Stretch Tsunami for Europe, for DeFi, decentralized finance, stablecoins, and for corporations. We have 3 big pieces of news that were announced at the Bitcoin for Corporations conference. The first one, Stretch is coming to Europe now. This is a very, very big deal because we know Saylor, he did Stream in Europe, but he can't get the ATM to work on Stream. And we also know that Saylor is all in on Stretch now. My guess is that he's going to let go of the other preferreds. He's going to go all in on Stretch. That's my guess. But Stretch, of course, is coming to Europe, and I think he found a way to circumvent the ATM by partnering with 21 Shares. Now, 21 Shares is a reputable firm. You may remember Cathie Wood partnered with them for her Bitcoin ETF. It's a reputable firm, and they are launching an ETP. STRC NA will be the Bitcoin the ticker symbol, and this will be a wrapper for Stretch in the US, but available to buy in Europe. So this is a really, really big deal because whenever someone is going to buy that in Europe, the money is going to be buying Stretch in the US, and then it's going to be buying Bitcoin via strategy. So I think it's an enormous deal. We're unlocking a lot of capital in Europe. There's a tremendous amount of investors in the EU who are yield starved and who are absolutely looking for yield. And so this is on Euronext Amsterdam. I think this is going to be a big deal. Strategy's down today. The market's not noticing. Everything's down. The market is not noticing the improvements that these companies are making. Not at all. The market is just asleep. Another big news. Now, we knew this one was coming, but I was expecting it for April. And I think there's a few other ones that are going to launch in April. But this is sooner than I thought, and this is bigger than I thought. So they announced at the conference the launch of a Stretch stablecoin, a stablecoin that owns Stretch that will pay the yield, right? It's 11.25%, so they're going to get a cut, they're going to get a margin, right? So I don't know how much that stablecoin will actually pay. I don't know the ticker of that symbol of that stablecoin just yet, but they are launching. As of 3 hours ago, they are launching a stablecoin, and it seems like the funding round for the company launching it. So, and the whole point of this company is dividend-backed stablecoin protocol. It's a dividend-backed stablecoin protocol, delivering double-digit yields backed by DAT-preferred equity, and they closed on a $300 million round. So I don't know how much of that money is actually going to go towards the launch and towards buying Stretch, but I could expect a big buy from Stretch. And if you go on their website, you can see their top 2 partners. They got other partners, but they're like Bitcoin wallet, etc. They have Solana partners, but it's like the top 2 partners are Strategy and Strive. Now, if you know anything, of course, Strategy is just Stretch, but Strive as a little more volatile, a little higher yielding preferred called SATA, right, which is designed to trade between 95 and 105. So somewhat similar, but higher yield, lower BTC rating. The BTC rating at Strive, I think, is like a 2x. The BTC rating of Stretch is more than 3x. So anyways, this is a really, really big deal that they're launching a stablecoin backed by preferred stocks that are backed by DATs that buy Bitcoin. This I think is going to take over, and it's funny. You have the crypto Stablecoin Act, they're debating 3% on stablecoins right now with USDC, etc. They're debating buying bonds. That might even be the Clarity Act, all of that sort of stuff. That might even be disrupted because the banks don't have to worry about stablecoins paying 3%. They're going to have to worry about stablecoins paying 10%. So this is a really, really big deal. And again, not reflected at all whatsoever in the stock price. I look at my screen, strategy is down 5% right now. Not reflected whatsoever. And then even bigger deal, and perhaps over the short term, perhaps this is the biggest deal. Corporations, they announced 2 corporations that have added stretch to their treasuries. Now, when corporations are cash, they usually buy, T-bills, commercial papers, very short-term debt. They usually buy very short-term debt. If they swap that very short-term debt that corporations usually buy for their corporate treasury, if they swap that by stretch, well, that could be a really, really big deal because there's a lot of money sitting in cash on the sidelines as corporations are just waiting to release money for investments XYZ. And of course, the fact that Orange BTC does this, this is a Brazilian DAT, so that's fine. It's not as big of a deal as this other one, Prevalent Energy, to Anchorage Digital. So I'm just focused on Prevalent Energy. I should have also looked at Anchorage. These companies are real companies. Prevalent Energy, for example, it's a company that has nothing to do with Bitcoin. Prevalent Energy is a joint venture between Mitsubishi and EES. So this is a very mainstream standard company, and they build battery storage systems. Anyways, this is a very mainstream, almost industrial company. I mean, it is an industrial company who's buying a Bitcoin-backed bond. A Bitcoin-backed preferred of Stretch. They're buying Stretch, and they're in an industry that has nothing to do with crypto or Bitcoin or banking. So this is a really, really big deal. Stretch added to corporate treasury. So you can see we have 3 very worthy pieces of news for Stretch today. Stretch coming to Europe, Stretch coming to DeFi, to digital finance, to stablecoins, and Stretch coming for corporate treasuries, for corporate reserves, for corporate treasury reserves, right? Think about it. Warren Buffett has $350 billion in corporate treasuries. How much does Apple have? What if this becomes mainstream in a few years, that people decide to diversify their treasuries and add some of that along with commercial paper, along with government debt? Oh, boom, maybe they add 10% of Stretch as part of their treasury management just to sweeten up the yield a little bit. Oh my gosh, this is a really big deal. And of course, the stock price is absolutely not reacting to this. Nobody cares. This is the long story of strategy. Is they execute under the hood and nobody cares, and you have people claiming, oh, Ponzi, oh this, oh that. But meanwhile, strategy is performing as it should, right? Bitcoin's down 3%, strategy's down 4.18%. That's roughly 1.5x. That's normal. Stretch, it broke it in after hours. It broke 100 in after hours. It tried breaking it earlier today, but of course the markets keep dumping, right? Nvidia had the most stellar earnings. They even had an analyst ask on an Nvidia earnings call, if you heard, the analyst asked, why you are so undervalued? Why are you not buying back your stock? And they said, we think we can achieve a higher return by investing in our ecosystem than buying back the stock. Like Nvidia's down 5% right now. This market is entirely ridiculous. It makes 0 sense. But crypto seems to be coming back to its senses. We're at a 16. Fear and greed, I mean, it's very low, but we're at a 16. We might get out of extreme fear perhaps this weekend. And lastly, I just wanted to highlight this. This was posted 5 hours ago, but this is important. So Max Keiser is the Bitcoin OG, like the oldest Bitcoin person in the space. And he's praising Saylor, calling Saylor the opposite of Jane Street. I think this is a pretty darn big endorsement from somebody who's always been behind Bitcoin and has preached Bitcoin since like $1, and he backs Saylor. And Max Keiser has been in Bitcoin since it was $1. So think about that, right? That's a big investment strategy. The people in the know. The market is nuts and it sells every single stock, good or bad. It just dumps them. There is a liquidity problem under the hood. There is a manipulation problem under the hood. These markets have not behaved normally for the past 5 to 6 months. They've absolutely not behaved normally. You know, go back to Monday. How could a Substack lead to half of the S&P? Anyways, okay. All right. So this was not investment advice. This is not financial advice. This is just entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.